All right, La Rocha here, February 5th, 2026. Pay attention, because the Asian close just fired off a major risk-off signal. We need to break down the vector for the US Open right now. Okay, so let's get right into it. The Korean market just did something you almost never see. The KOSPI absolutely cratered, down 3.86%. And look, this wasn't some random broad sell-off. No, this was a surgical, targeted valuation reset for the entire AI hardware space. And the headline number? It's just a massive liquidity drain. We're talking foreign funds yanking over 5 trillion Korean won from the market. To put that into perspective for you, that's more than the entire market cap of some major companies. Just gone. Vanished in a single session. But here's the thing. That huge number, that 5 trillion won sell-off, that's the noise. That's the smokescreen. It's what they want you to see, to distract you from where the smart money was really moving. And this is the signal. The real story here, the one that's going to dictate tonight's U.S. session, wasn't panic selling at all. It was a calculated, almost hidden, capital rotation, money flowing out of semiconductors and directly into physical, hard asset, energy infrastructure. What we just saw play out is what I'm calling the great decoupling, a crystal clear strategic pivot from silicon to steel. Think about it like this. On one side, the market is frantically dumping the brains of AI, all that shiny, leading-edge tech hardware. But on the other side, you've got the smart money making these very targeted strategic buys into the assets that actually give those brains their power. And this chart just lays it all out, plain as day. Look at this divergence. Samsung Electronics, right? The bellwether for global tech, absolutely hammered, down 5.8%. But at the exact same time, Doosan Enerbility, a key supply chain node for nuclear and turbines, was a top foreign net buy. So what does that tell you? This wasn't panic. This was a calculated arbitrage play. So you have to ask, what's really driving this? Why are some of the biggest funds in the world suddenly rotating out of chips and into turbines? Well, let's get to the core thesis for tonight's action. I'm calling it the Power Foundry. So what is the Power Foundry? It's the new critical bottleneck in the system. You know, for years, all we talked about was the silicon foundry, the chip fabs like TSMC and Samsung. But the game has changed. The real constraint on AI growth isn't compute anymore. It's the actual physical energy infrastructure required to power all that compute. Yeah, we all love to think of these AI models as being forged in pure data, right? These abstract things just born in the cloud. But the hard, physical reality is this. They run on raw, massive amounts of electrical power. See, data might be the fuel, but the grid is the engine. And that engine is starting to redline. And here's where it gets really crazy. Just look at the scale of this resource crisis. On the demand side, you've got these next-gen chips like Nvidia's Blackwell just exploding power consumption. We're talking twice as much as older models. A single data center now needs the same amount of electricity as a small city. Now multiply that all over the world. But then look at the supply side. The grids in the US and Europe, they're growing at a pathetic 1 to 2% a year. This massive gap, this structural imbalance, that is the whole thesis right there. So why Korea? Why is the money flowing there? It's because Korea's nuclear EPC firms, that's engineering, procurement, and construction, they've basically become the TSMC of power. In a world that is absolutely desperate for more energy, they're one of the only players left on the entire planet who can deliver these huge strategic assets on time and on budget. That makes them a non-negotiable, mission-critical part of the global AI supply chain. Okay, so that's the signal from Asia, loud and clear. Now, the big question, how do we translate this warning shot from Seoul into a concrete, actionable plan for the US Open? Let's bridge that gap right now. All right, here are the indicators you need on your screen. The main battle to watch is the semi-ETF, SOXX, fighting against the utilities ETF, XLU. That's the tug of war. Now, our biggest risk indicator is the dollar-won exchange rate. It surged to 1,469. When you see that spike, it's a classic fear signal. Capital is fleeing for the safety of the US dollar. So our core thesis is simple. Seoul has already priced in a deep correction for AI hardware, the big catalyst that will either prove us right or wrong, Amazon's earnings, tonight. Okay, let's get tactical. Time for the execution protocol. Remember, we don't predict, we prepare. This is a trigger-based plan for the U.S. session. The primary asset we're targeting to execute this is the NASDAQ 100 futures, ticker NQ. And write this number down. This is the only number that matters tonight, 24,700. This is our line in the sand. It's the critical support, the key pivot level that will define everything that happens next. So here's your response matrix. It's simple, it's binary, there's no gray area. If NQ breaks below 24,700, the protocol is clear. Reduce tech exposure and raise your cash position to 30%. You want that dry powder ready for when the selling stops. A break of that level confirms the risk-off signal has officially jumped from Asia to the US. Now, if it holds above 24,700, we stay neutral. We watch and wait for a potential technical bounce, especially after Amazon reports.
Okay, for your secondary screen, keep an eye on those power foundry assets. Specifically, we're watching Vertiv and GEV. If these names break above yesterday's high, that's a huge confirmation of our rotation thesis. And of course, it all comes back to the main catalyst, Amazon. The street is looking for a massive $211 billion in revenue, but the real story is going to be the growth in their cloud segment. That's the tell.
So I'll leave you with this final thought, the key question for tonight. This is the bear case. If that dollar-won rate stays stubbornly high, above 1460, and the NASDAQ decisively breaks our 24,700 pivot, are we about to find out that this whole tech rally was a false breakout? Does this finally validate that huge structural risk-off signal Asia just sent us? That is the vector you need to watch.